Here with his weekly week look. Today is Thursday 14th of March, video going out at 12:44, and as usual we're looking at the November 2013 current new crop wheat chart, and we've got the daily bar chart in front of us, and on this chart I've got a 5, 20 and 50 day moving average, and you can see here clearly marked that we've come down the last 3 times to test this level of 180. January we came down, test it. February came down, test it. Now in March we come down, test it. All the moving averages are now pointing down. We've had a cross of all of them. We bounced off this from last week and we've come back up here to test this 184 level. I'm personally looking to be selling somewhere about 185 for a retest of this 180 to break, fill this gap left in October, and then come back down here, £10 highs in place, and we've got the moving averages pointing down. Now I've just been doing some longer term research to see why this level of 180 is so important. I just bring up here, no, I don't want that chart. I want this chart, a longer time frame here. You can see this is a chart, a stitched together chart of the last, since 2000 May market, and you can see that we had a peak here back in June of 2011, and we've had the peak here at the end of 2013. So you can see that prices at the moment are just testing this high of 2008. So you can see how important this price level has got. We then lost a total of, just look at my notes, £100 a tonne. Well, you could see back in June of 2011, similar happened. We broke 20 day, then the 100 day, and we dropped a total of £80 a tonne. So at the present moment, we have come down to break through the 20 day moving average. We're now breaking through the 50 day weekly moving average. If this break continues, then we are looking for somewhere on the region of a £65 a tonne fall. But I'll just turn over another chart here, come back to this chart here. This is on the new crop basis. This is on an Elliott wave count. You can see here this wave 1 we've had down here, which has been a total of £20 a tonne. We then have this pull up. If you take this calculation from here, the recent high of 194, if we break this 180 level, we could then go down to test 129, which would be right down here. The time frame on this move, we'd be looking at 6 months. We're already a month into it, so we can't say this is going to happen yet. But if the 20 day moving average, let's pop over here, if this 20 day moving average red line here crosses below the 180 during April, then we are at risk of this market going down £65 a tonne down to about 129 by August of this year. This similar count I did because it hasn't, we haven't broken this level, the 2008 high, but if we do, then obviously it does sound warning bells that we could be on for a big move down. But at the present, obviously, until this happens, it's only a work in progress, and we'll keep an eye on it over the next coming months, certainly during April, and I'll put some more figures behind it. But in the short term, triangle in play at the present moment, if the market wants to, it could go out and take out the previous high here and go out to test the 200, but all the moving averages are still pointing, and the current short-term trend is that we are likely to break this level on the next test. But obviously I'll put an update this time next week, and we'll keep an eye on the longer term time frames, sort of work in progress over the next few weeks. Thanks for watching.